QuickBooks Enterprise 2021. Class Tracking Responsibility Accounting. Allocate Service Center expenses to revenue centers with the help and use of Excel. Let's get into it with Intuit's QuickBooks Enterprise 2021. Here we are in our Class Tracking Responsibility Accounting Practice file. We currently have the open windows open. You could open the open windows by going to the View dropdown, selecting the Open Windows list. In prior presentations, we've been allocating to the various departments the expenses with the help and use of the class feature. This time we want to think about how we're going to allocate those non-revenue center expenses to the revenue centers. For further analysis, let's take a look at the P&L by class by going to the Reports dropdown. Company and financial. We want the profit and loss, but the profit and loss by class. Profit and loss by class. Changing the dates up top from 01/01/21 to 12/31/21. There we have it. Now on these two, these are sales items here, which means we would expect them to have revenue in them, and we're going to add revenue to them shortly. Then these are the service items. When we think about responsibility accounting and how we're going to measure the performance of these different departments, breaking them down to departments so that we can measure them in accordance to what they have control over, which is the only fair way to measure, then we'd like to see the detail here on this level so we can see performance measure-wise how they're doing, but we'd also like to allocate these service items to the point of having them from a broader perspective, which is to generate revenue. So we'd like to be able to also allocate these line items to their appropriate locations on the sales side of things. So to consider this further, let's first add some income line items. I'm just going to add income to the sales sides to emphasize in our practice problem the breakout of the income. And then we'll think about how we can basically allocate these departments out and still see the detail that we want to see. So let's go to the home page. We're going to then add a couple invoices just to put some revenue on the books here. I'm going to call it Customer 1. Customer 1. I'm going to set up Customer 1. As with the vendors, I'm primarily concerned with entering the classes for our practice problem here. So I'd like to set a class. This is another area where we have the default class that are set up. This is something that you could do in Enterprise, can't do so much in Pro, set up like a default class per customer. So we're going on down to additional info down below, and then we could set our class. I'm going to say this is Sales Department 1. So that's going to be Sales Department 1. I'm going to say OK, and then tab through this. And let's say this happened on, let's go back to like February 02/15/21. I'm going to minimize this to the right, get that out of the way. I'm just going to call it item 1. Item number 1 is the thing we're selling, and that's going to be a service item. I'm just going to leave it all blank here, but I need to have a revenue account. So this is going to be revenue. I'm going to have to add up a revenue account. I'm just going to call it sales. Sales. Now, I'm just going to have one sales line item for the two departments, then I'm going to break out the sales by department. It may be useful, especially for the sales side of things, to have multiple different sales lines also to break out two departments, but again, that'll make the financials a little bit longer. If you have just one account and then you break it out by the department, it'll be a little bit faster, but if you have two accounts, you kind of have that double check, which is kind of nice as well. But in any case, we're going to say this is going to be then for the amount of $40,000 for Department 1. So I'm going to just say $40,000. And you're changing your standard price. That's fine. Okay. So there is that. This is going to increase the accounts payable. The other side then go into revenue. So let's go ahead and save it and close it. And then we'll check it out. So if I go to the P&L here, and say, okay, so now we got some revenue in Department 1. Let's do the same for the Sales Department 2, and do that again. So I'll do it again. This is going to be Customer 2. I'm just going to say Customer number 2, and we're going to set that up. Concerned with the classes, additional class, the class then of, this is going to be Sales 2. And then I'm going to say, okay, and then we'll tab through this again. Same item should be fine. The amount then is going to be $48,000. So I'm going to say this one's $48,000. Okay, so there we have that. I'm going to say save and close now. So let's save it. Let's close it. Saving and closing. And then if we go back to the profit and loss now we have the sales departments have revenue in line in them. The service departments do not, meaning these are cost centers that don't have revenue. These are sales centers that do. So now let's go to Excel to think about the next step in our transaction. If I was thinking about it in Excel first, we would say, okay, well now what I'd like to do is allocate the service items. I'd like to allocate these service items to the revenue centers here. And I then need to think about, well, how am I going to do that? We could use the same kind of activity-based kind of concept and say, well, what activity-based, what can I use in order to allocate these out? Because let's say these are something like maintenance and something else that, that are two items that we use in order to help us generate revenue. So we have to think about, well, how can I allocate the total cost of them to the revenue centers? And we could use some type of activity base. A common activity base would be, say, sales. So now we're saying the sales was 40 and 48. So once we know what that is, we can then say, okay, let's use that ratio of the 40,000 divided by the total 88,000. Let's take the 48,000 divided by the total of 88,000. And then if I sum these up using the trusty sum function, that should add up to 100%. And we could break it out 45, 55. So we could do something like a journal entry. We could say, okay, for service department 1, I'm going to basically decrease it back down to 0. So it's going to be negative of this number. And then the other side is going to be then going to the sales department 1 and 2, which is going to be equal to, I'm going to say negative of this times the 45%. And then this is going to be negative of this times the 55. And then we can have our allocation. So then we'll add this up and we can get to our total expenses then down below here, which would be equal to the sum of where we had last time plus those added up. And then obviously down here would bring it on down to 0. Equals the sum. So that gives us the detail kind of up above, and then we allocate it out according to the activity base. So we might use some other activity base. The sales is probably going to be a quite common activity base, but we might, you could use the square footage again, but now the square footage between the sales departments, so it would be the 600, the 1,000 adding up to the 1,600, 600 divided by the 1,600, 1,000 divided by the 1,600, or we're going to say number of employees. Now, we only set up 4 employees, but let's imagine we have the number of employees. That's another common like activity base. We can say, all right, I'm going to break out the allocation, based on the employees in department 1 and 2. So if there's 28 employees divided by the total, 40 divided by the total, that would be our breakout. So it's just a matter of what do we think is going to be the most appropriate activity base to get our ratios so that we can then break out our departments in the most effective way. So this is going to be 4159. So department 2, I'm going to do the same thing. Negative of this got to be down here. Negative of this number. This one's going to go down to 0, and then I'm just going to allocate it out. Negative of this times, I'm going to break it out between department 1 at 41%, and then I'm going to say negative of this times the department 2, which is 59%. And then that will add up to the total. So we're zeroed out if I sum them all. And then summing this up, that adds up to the 0. And then now we can allocate it to the departments. So now we have these two allocated to the department, so we can see them on that level. When we're considering that level of analysis, we could see them broken out and included in the revenue centers. And then when I want to drill down further and basically concentrate on just the service centers, I can see the detail over here for the service centers. So let's go down and allocate out then our totals down here. We could say, okay, the sales are going to be equal to, we said, the 40,000 and then the 48,000. We have cost of goods sold there. Now this should have been input when I entered the invoice. Let's go ahead and just manually input the cost of goods sold so we can just line up to this hard-coded number here. So once again, if I go back to QuickBooks homepage, when we entered the invoice, if I had the proper items in there, we could have had the cost of goods sold added in the item. I'm just going to enter them as a bill here. So we'll add a bill. And I'm going to say that we're going to say this is inventory vendor 1. And I'm going to say that we'll set that up. And then once again, I could go down here to the additional information and set the class and say this is going to go to sales 1 and then OK. And so we'll put in the amount, which is going to be for the 20,000. And I'm going to put this then to an expense, which is going to be cost of goods sold. And I'm just going to expense it. So we're not tracking the inventory. I'm just going to put the inventory on the books. We're not tracking the inventory through the QuickBooks system. So then I'm going to say that this is going to be cost of goods sold type of account. Cost of goods sold. And save that. And there we have that. And then I'm going to say save and new. And let's do it one more time. Save it and new it. And then we've got inventory vendor number 2. And we're going to say add that one. And this is the one that we buy the inventory for the second department. And this is going to be sales number 2. And OK. And then this one was for, how much was this for? 18,000. This one's for 18,000. And this is going to go once again to the cost of the goods that are sold. And then we'll save it. We'll close it. We'll check it out. Saving, closing. Checking it out. And don't show me that again. Don't show me that again, please. Okay, so there we have it. So now we got the cost of goods sold kind of lining up over here. That looks good. And then if we have our gross profit. So let's sum this up this way equals the sum of these two. We're going to subtract them up, subtract them down this way. 88 minus the 38. I'm going to then copy it across with the autofill, which is going to fill it automatically. And then we'll pick up our information down below. So the salaries, we had, let's not pick up the total. Salaries up top, we have the direct items for the salaries, for the sales, the 6,000. And then I'm going to copy that across. The supplies then, we had for the sales 400. And copy that across. Let's copy that across. And then we had the rent. And the items allocated directly was the rent up top, which was the 3,000 and the 5,000. 3,000 and 5,000. Utilities that are applied out directly up top are the 300 and the 500. 300 and 500. And then we have the service department that was, so we broke out the service department up top. So the service department was going to be for service department 1, for the sales department 1, we've got 1,000. And then service department 2, sales department 1 is that amount. And then we've got sales department, service department 1 for the sales department 2, and 2 and 2. All right, so then we could sum this up. I can then say expenses equals the sum of these items. I'm going to copy it across using the old autofill. Going to sum it across this way equals the sum this way as well. And we're going to copy that down. So we sum that. I'm going to put the little underline over here by going to the home page font group, the U, which is the underline. U stands for underline. And then we could subtract out then the gross profit minus the operating expense. And then we can copy that across. And this is what we basically could think about how we can see this method of it, right? So in this system now we have the sales departments, and we have everything lined up with it, as well as the service departments broken out. Notice that these service departments broken out do include some of the expenses up top, meaning the rent and the utilities and the supplies and what that were allocated to the service department are now included in these two line items. And if we want to break out more detail, we could see the more detail for those items basically up top in this worksheet. They're included in one line item down below. So now we want to think about how we can do that on the QuickBooks system, and we'll continue with that next time. So we need to do basically this type of allocation next time, so we can allocate this out. And if I go back into QuickBooks, we now have this set up so we see the 4 different departments, the cost centers broken out. How can we break it out so that these items, the service line items, can basically be seen as the sales in the sales department line 1 and sales D1 and D2, and still be able to break out the detail when we need to break out the detail. So that's what we'll discuss next time.